Tata Communications is the next in focus. Let's get in Soumit to set up the conversation and give us an insight into the results. Soumit.
Well, if you look at the first quarter numbers, they were a bit below compared to what the street was estimating. If you look at the revenue, it was down 0.5% at close to 5,960 crore. EBITDA growth was just 1.3% at close to 1,140 crore. Margins expanded by around 40 basis points on a sequential basis, with the net profit number that was down around 82%. But this was because of one-offs, not only in the first quarter of FY26, but also in the fourth quarter of FY25. In fact, in the fourth quarter, there were exceptional gains of around 890 crore rupees, while in first quarter there was exceptional losses of around 62.6 crore rupees. Hence, we are seeing this 82% drop in the net profit number. But apart from that, even if you adjust for the net exceptional gains and losses, the numbers are below than what the street was estimating. Now, if you look at the data margins, they continued to decline. EBITDA margin, in fact, was lower than estimates owing to weaker gross margin and rising contribution from lower margin portfolio products.
Well, Soumit, let's put some of those things and the questions to Kabir Ahmed Shakir, CFO of the company, joining us on the show. Kabir, so good having you. Thanks much for taking the time out. Relative to what you may have either guided for or expected or led the street to have expected, this flattish kind of growth, what could have been the reasons for the same? And also, Kabir, just a word on the margin picture as you kick-started the year.
Morning, Neeraj, and always good to be back on the show. Let me unpeel this for you. I would say over the 3-4 years, the journey in Tata is almost like a swan on a lake, and it look calm on the outside, but we are like paddling very, very heavy. Sometimes there's a splash, and sometimes it's calm. And I think it's one of those quarters where it may look, kind of flattish on the top, but there's a lot of heavy work, that's gone in, and that's why I'm here to unpeel, those details for you. I mean, the growth at a very top level, consolidated for all of it, maybe a decline of 0.5%. I mean, that's a result of a couple of things. One, honest deal that we did for one of our subsidiaries when we exited, that deal. I mean, we had to take that reversal on the top line. All the costs were already provided for, so it didn't have a P&L impact, but optically, it did bring that down. So I'll shift the focus to data growth, despite all these macroeconomic conditions and uncertainty on tariffs and all of those things, grew at a 9.4%. And let me again, resituate, this growth, no acquisition benefits on the base. So it's a clear apples and apples comparison. So a 9.4% growth is something quite decent. I mean, yes, we would wanted it to be in double digits, but I'm quite happy with 9.4. On the margins front, Neeraj, we are making a sequential improvement. We were at 18.7 when we ended the year. We closed at 19.1. So we're making a steady increase in margins to get back up. Soumit actually did a very good analysis of our PAT. We had the land sale. I mean, I've spoken many a times on the show. We have a real estate strategy. We are going to monetize land parcels. And as we monetize land parcels, these are chunky, deals and chunky transactions, and they will come and hit in that particular, quarter or a quarter before when we recognize the deferred tax, asset coming as a result of that. So you'll see that lumpiness coming through. If we remove, all of that impact, yes, there is headwinds that we have because of mix effect. Our core connectivity business, has, declined. There are, again, some reasons for it. That's a high-calorie business. If that declines, you obviously see that effect, come through. Our digital portfolio is picking up. It is lower margin to start with, but it's our focus. We will get to a certain scale after which we can, ramp up the profitability of the business. So I would say this is all clearly on track. Yeah, I mean, there'll be a little bit of slip here there that I'm fine with that, but it's clearly on track.
Yeah, I mean, no, small slips can be understood, Kabir, 100%. But just a question on that, therefore. If I strip off the M&A, what is the margin? And because of these, it's a challenging business per se. You still some time away from 23 to 25. Do you reckon that is multiple quarters out, that guided zone of 23 to 25%?
Neeraj, let me, first answer the M&A. There's no M&A effect anymore because the base is also now, with M&A, and now even the current quarter is with M&A. So the effect of M&A is completely worn off because Kolera happened almost, 7 quarters ago, right? So that effect is completely out. In terms of our margin, we just concluded our investor day early June. We gave a very clear picture to the to the street. By FY27 is what we wanted to get to 23 to 25. That's out by a few quarters, 4, 5, that is out. Are we committed to that ambition as structurally as a company? Absolutely yes, right? So we are tracking against that.
Okay, but there are no timelines that you are attaching to that, I reckon, for now.
We have given an ambition that we are looking at FY28 to get back into that particular range. But
Okay.
my only point is, in between, if there is any corporate action, that kind of happens, and lots of these things are there. I've told the market that we are continuously reviewing our non-core assets, right? And whatever action that we may actually take will have a corresponding impact, up or down. So we sold the ATM business. We diluted our stake in NetFoundry. Another 10-11% is left over. We will do at some point in time. So all of those actions, will continue to have an impact. Sometimes up, sometimes down.
So Kabir, would you say that then for the 23 to 25, FY28 should not be construed as a guidance, but more like an ambition? But there are other actions which may change the timeline.
All our numbers that we have quoted, right? Doubling our business, margin, ROCE. These are all our ambitions and our guardrails with which we take management decisions. These are not. I hate to give. I know the market loves guidance, but I hate to give guidance because we are in such a volatile business scenario, right? I mean, interest rate environment, tariffs, geopolitical crisis. It's very difficult to pinpoint one number and not have the elbow room to navigate your business.
So then that 28,000 crores as well by FY27, you would reckon now that too you are saying it's not a guidance per se. It is more a number that you want to reach, but it may happen in FY27, could get pushed as well.
Absolutely. So the moment we start aiming higher, we are of course doing better than what we used to do, right? So we used to be 5 years ago low to mid single digits kind of growth in this company. We consistently delivered for a lot of quarters double digits. So we want to stay in the double digit territory. I mean, 9.4 is almost there close to 10. And once we start aiming at double digit, then it's a matter of time. Our digital portfolio should start kicking at 25-30% kind of a growth trajectory. Then we will get there to doubling our business.
Okay. By the way, because the stock is doing very well now, 4% higher as the conversation is going on. Kabir, just one more question, maybe two more, maybe very quickly. One, I think in Q4, as I'm told, you had mentioned that few deals which are supposed to get signed got rolled over. Now, tell us about deal signings and about the order book as well. Has it grown? What's the outlook? Are large deals still getting time to close?
Yeah. So, Neeraj, firstly, Q1 signed a very, very healthy order book. Right. So I'm quite pleased with that. It's a very healthy double-digit order book that we actually signed, in Q1. Now, the effect of it we will see in Q3 from Q4 onwards. It does, take time. The large deal time closure, well, that's the nature of the beast. Ours is, an important, activity, but never an urgent activity for an enterprise, right? So to bring that urgency is where we are to demonstrate what the value we bring to the table. But these uncertainties will always remain. I think we need to build that into our funnel. I think we need to build that into our ways of working and maybe work ahead, and circumvent that. That's what the teams are doing. So I'm happy with the order book that we have in Q1.
I mean, those rollover deals, you close some of those too, you're saying,
yes,
right?
I mean, yeah, we've closed, some of them, and there is one which needs to have happened this quarter again got rolled over. I mean, so that is going to be now almost BAU.
Got it. Kabir, one final question, and I'm not asking now you now for a guidance on core connectivity, but just the color there, right? Because that, as you also mentioned, right, was kind of maybe you're trying to stitch it together. It's taking time, whatever, but it was weak and it's been there for a while now. I'm not asking for a quarter from where it will turn, but give us some color about where do you expect the recovery to be like.
Yeah. So, yes, I would say for the last 3, 4 quarters, we did have cable systems down and cable cuts that happened. Never happened that three cable systems were down at the same point in time. So that was the reason why we saw the decline, in the last few quarters. Now that's behind us. Quarter 1 is normally, when we do renewals, of contracts and stuff like that. So that has its own seasonality, effect coming through. We don't see this business as being, a negative growth as we see this quarter. That's not where this business belongs. If we actually look at the macro trends, DC to DC connectivity is going up. AI and use of AI is going up, and for using of AI, you do need to pump in the data to train the models. So all of the macroeconomic factors are in favor of supporting a core connectivity growth, and therefore we are behind it to get our customers to start using that. So I would say I would soon start to expect this to come back to its low to mid single digits growth, if not in one, in definitely in 2 quarters.
Got it. I'm not considering that as a guidance though, Kabir. And point well noted, more indicative numbers, not a guidance on any of those numbers. Wish you all the best for the quarters ahead. Thank you so much for taking the time out and speaking to us today.
Thank you, Neeraj.
All right, that's Kabir Shakir on Tata Communications, at 4.5% higher now for that stock. Deal signings have been particularly strong for them, as he mentioned. This time around, and some of the rollover deals from quarter 4 have also been signed in.